go live. All right. Welcome, everyone. Today, we have our monthly deck roast. So if this is your first time joining us, do some quick high-level intros. Also, shout out to our sponsor and kind of give everyone the structure of how today works. We have a lot of decks come in, way more than I could possibly review today. So if I don't get to them today, we'll do them next month. And of course, you can always resubmit if I don't get it for next month. But excited to get started here. Looks like we have everything live on both fronts. Just double check. Yep. All right. Looks like we're good to go. All right, so as a reminder, we're live on LinkedIn, YouTube, and on Riverside. You can use any of the chats to engage with me. I'll be checking back and forth with them occasionally. If you have any questions or want me to hit on any particular topics as I go through, by all means, let me know. And before I jump in and give my spiel, I will kind of first introduce Deco, who is our sponsor for the monthly pitch deck roast. They are a pitch deck building company. So your deck will be built by VCs. So there's active employed venture capitalists that are the ones working on your deck and helping you work on messaging, content, design to increase the chances of you securing capital. So we're grateful to have them as a sponsor. You can learn more at getdeco.com/thunder. They offer you a 10% discount. Just mention that you found us through Thunder. But they do great work. We worked with them a couple of our clients, and only makes sense to have them here represented on the deck roast. So before I get into the individual decks, just to kind of pull you back here. So at a high level, give you an introduction to Thunder and what we do and what we specialize in. So Thunder is a tech-enabled investment bank. We help founders navigate their capital strategy, whether that's sourcing and acquiring debt, equity, or pursuing an acquisition of the company. And we help companies basically figure out what is in it about them that makes them special to go out and get the capital that they need, as well as fixing anything within the business to help them have better opportunities for securing the capital or exit opportunities that they're trying to pursue. We also provide a suite of free tools that we encourage everyone to take advantage of. So we have our VC Finder tool that you can find at thunder.vc, as well as our Debt Finder tool, which recommends lenders that will be more likely to provide you debt capital or working capital. So we just try to prevent founders from wasting their time chasing the wrong investors that are unlikely to write a check by giving you a data-backed reason to pursue a very short list of lenders or VCs. So be sure to check those out. And if you're not already a subscriber to our weekly newsletter or our podcast, be sure to go to join.thunder.vc and you can subscribe to our weekly newsletter. So I know that's a lot, but we'll go ahead and jump in. Yusuf, are you still able to follow? Let's make sure I'm still live everywhere. Hopefully I'm not frozen. Doesn't look like it. Perfect. Yeah, Phil, go ahead. You can drop your deck in. It's just our Luma is lu.ma/Jason Kirby, and you'll be able to find our link to submit to future events. Something's wrong with the framing, it looks like. Not sure exactly why. See if I can get this fixed real quick. Not sure what the problem is, why it's that way, but whatever, we'll go ahead and just keep pursuing the rest of the conversation here. All right, so as a reminder, in this deck review, basically what I do is I pull up a wide variety of decks. I have not looked at these decks. I have not seen these decks. They were compiled and organized by one of my analysts. And basically, I treat this deck review as if this is the first time I'm being introduced to the company. And this is their first impression to get my attention and basically try to book a meeting. So as a reminder, decks do not secure investment. They secure an extra 15 to 30 minutes of an interested investor's time. So that's the perspective you need to have when building the decks. And that's how I come in and I just try to give my raw feedback. Typically, I spend about 15 seconds to about 120 seconds on a deck before I make up my mind. I will probably spend a lot more time because I'll be thinking out loud about the deck and kind of giving my feedback. And then I give a score of 0 to 5. 0 means that deck was terrible and awful and has no chance of raising capital or landing a meeting. And a 5 being like, I'd be surprised if you don't already have, term sheets or lots of interested parties. So I'll go ahead and I have these all picked at random. I think we had about 30, 40 decks submitted. I think I'm maybe only going to get to about 5 or 6 of them. So I apologize if yours it was not selected, but hopefully you'll still get value out of the feedback that I provide. All right, so I'll go ahead share my screen. All right, so just as a recap, our sponsor today is Deco, the deck building company. Have your deck built by VCs. Learn more at getdeco.com, or you can email Robert directly at robert@getdeco.com. All right, moving on. So the first company we have used a journey. This is a tool I'm very familiar with that helps kind of provide different assets or mediums for you to engage with as a prospective investor. So beyond just sending the deck, they kind of give you a video intro, which this one used an AI avatar. Interesting choice. So that one's a unique. That one kind of throws me off a little bit. Not kind of cool, but kind of not sure I want to sit down and watch a video. But he did give us a link direct to the deck. But basically, this is something that you can experiment with. But at the end of the day, VCs are used to just kind of seeing decks and just processing them a certain way. So it's not a bad idea to kind of break them out of the norm and kind of make them, learn a little bit about you. And if you have some kind of credible introduction to the VC where it's not just a cold intro, this could be helpful for them to get to know you a little bit more, have a little bit more context. So I'm not against journeys, but they are a risk. Sometimes VCs don't want to deal with trying to navigate a new tool if it's not mainstream yet. It's still a relatively small part of the market. All right, so going through this, reinventing. All right, so yeah, that's the other thing is you got to find the navigation and whatnot. Subscribe to the newsletter. That's not a terrible idea, but it doesn't work. So you're asking me to click somewhere here, but it doesn't actually work. So if you're going to make me do something or encourage me to do something, make sure it actually works in the format that you put it in. All right, Amari, the Broca, reinventing men's mental health for the future. Okay. Broca, it sounds interesting. The AI bro you never knew you needed. Interesting. Okay, so that explains the little avatar result earlier. This kind of model is a bit overwhelming. I know what these are. Kind of these one-page business plans. It's a lot for anyone to kind of consume on one slide. I typically prefer. Oh, here we go. Oh, okay. So so that's part of the issue. Navigation. Again, when you use a new app, it's not super intuitive in where I'm going and how I'm using it. You run the risk of potentially, disengaging an investor. So just a PDF or a DocSend or things like that are usually just safer because it's less headache for them to deal with. All right. World's first speech and vision enabled AI life coach, mentor, and friend. So you guys are doing product-led pitch. I guess those are the slides here you have here, videos. So core team. Okay. So leading with a team. So usually when founders lead with a team, it's usually like early stage, which is fine. They're trying to highlight that, we have a team. So you got a tech lead. Great. I imagine you guys are all founders. If you don't list anyone as a founder, I will assume everyone is a founder. So just make sure you're cool with that interpretation and situation. But nothing bad or substantial about this. Just looks, good. Check the boxes here. I don't know what XXXX up here. You have some kind of psychiatrist or you're planning to get one. I don't know. So just, probably clear that up unless you just didn't want their name publicized. Silence. Yeah, so men are suffering. Shane. Drake. Those Raptors. All right, so dealing with personal health issues or mental health issues. All right, so addressing the problem, scale the problem. So I don't disagree with the problem, so it's just a matter of what you're going to do. And that, people of color are most at risk, and that there's a new way to do it. Meet Amari, that company you never knew you needed. I don't know if that's a great tagline for VCs, but it's one of these things where show me the proof in the pudding. Problem solved. I don't know where to start. I lost my mind. So I guess by clicking on these, I know where to go. I'm not sure I follow exactly, but yeah, it's kind of nice that you are dealing with, for men that don't necessarily feel comfortable talking to a human, they're basically talking to an AI and can say anything and everything that they want, and hopefully feel like they're being listened to, I guess is the model here. So getting back to the market size and just the pain, it's a big issue. And they're underserved and need a solution. Not sure I understand the bubbles here, or the X's. Forget the. Okay, I see what you're saying here. Okay, so drop the. All right, have me change my mental model as an investor and look at it from a different perspective. So all these different types of bros, as opposed. Okay, so this is your go-to-market of all the different types of bros you could go to. Got it. So once you get into one bro club, the crypto bros, the gamer bros, whatever, imagine you have a land and expand strategy is what you're trying to articulate. It'd probably be nice to, how would you quantify this? But yeah, I can imagine it's a large population. Okay. So these are all projections. So you're essentially going to charge $360 to $600 a year direct to the consumer. Looks like the deck is a little bit unpolished. There's some missing information here. These businesses struggle a lot. Just personally speaking, knowing like mental health related startups, it's hard to get the consumer to actually end up paying and stick with it. There is possibility that your app does work on the patient side. So basically, my interpretation to kind of get through here, this looks like a very early stage, idea stage. Maybe there's a MVP that's working at this point that's effective, but like really what's going to happen here is actually feeling the product and, doing like a live session, which it looks like they're trying to enable here how a real session would work. I'm not going to do that for the purpose of this call. But for me as an investor, there's a lot of apps out there from trying to address mental health. And I feel that a lot of VCs have got burnt betting on those deals or overpaying for those deals. So these types of companies are having a harder time to raise. But I totally believe that, if your product works and if I feel an investor is interested in this category or solving this problem, that you can potentially get money, assuming that the product works. Deck's not bad. I would just say it kind of threw me for a loop a little bit in terms of like it's not 100% traditional, which I usually prefer traditional, but sometimes it's good to break VCs out of their norm. And this is not really the format where I'd really dive deep into this. And I personally don't have a lot of interest in these types of apps from an investment perspective. I want them to exist. I want them to work, but I don't see them as, massive, products that will win the market. And also when they're more niche, they're harder to kind of really ultimately hit those bigger valuations. So I give this one like a 3 or 4. I think it was well put together as well, established for a series or like a pre-seed type deck. It's not bad, but again, a lot of different approach, different style of doing this. So in my personal opinion, 3 on this deck. All right, for time's sake, I need to move a little quicker on these ones. Yes, celebrate. Okay, so one note, don't send slide decks in the editable format. Like looks like I can just come in here and like don't give VCs the editable format of your deck. Give a PDF. If you're going to send it on Drive, send it as a PDF, as a link. Do not send the actual presentation. Unless you're expecting them to edit or provide comments and they're collaborating with you, don't do it this way. Okay, so one thing here, you're selling me, yes, celebration solutions for all, but then you give me a hiphub.com email and a completely different, so that just makes me think like, wait, is there two different companies here? You've already disengaged me when I see just discrepancies in the brand, in the communication. So Nick, you should just have a yes.ai email and have that be your contact. Don't distract me with a different brand, which is not correlated to this. So just throws me out. All right, so you're focusing on celebrations. Yes, I did grade the first stack. I gave it a 3, David. Thanks for asking. I think the deck was not bad on the last one. It was just it's good for super early stage, angel investors that are passionate about the problem. All right, revolutionizing celebrations, changing how we plan celebrations, innovative app experience. So AI celebration event planning app is my understanding. Doesn't sound super compelling, but I'm curious how the product actually works and if it's truly real AI or anything of real substantive value. Choose your celebration requirements and vibe. All right, so don't tell me, show me. So in this case, I guess we'll look at product beta. Okay, so you don't have real designs yet. This doesn't look anything in particularly innovative, in terms of how this would actually work. Like, give me some kind of like visual or representation. Try to get more creative in Figma. If you're pre-product, and you don't have everything built yet, spend the time creating a good Figma so I can really wrap my head around what the opportunity really is when you're that early. And, rather than doing this, show me what the product, and this is attempting to do that, but it fails to do so effectively. Doesn't really show me how I'm going to benefit from using this product. Your model, so you just go straight into the business model. So basically, the problem isn't really quantified from like a level of pain. Like, sure, you got to come up with ideas and time and coordination and stuff like that. But how frequently am I having that pain? How big is the opportunity for this? What are my alternative solutions? And here you have like your pricing guide, but it doesn't even sound like you have a product live yet. So, it's like take it with a grain of salt in terms of how realistic it is. And am I paying per month? Am I paying once per event? And you're taking sales of what? And you make commission on what? I'm kind of confused. I guess maybe you're providing like actual things to book, which means you're a marketplace, which means you have to have all those things, which again, sounds like it's you miss spellings. So it's just like, there's a lot of promise and we're only into the 6th slide and there's no validation yet. There's no reason. I have not been convinced on why the world needs this yet. I have not been convinced that, there's a working product here to dive into. I'll probably lead with the team slide. It shows like you got the full stack at your CEO, CTO, and CMO. All looks like decently credible. Background. So I'd probably lead with the team before going into it. Advisors. I know one of the advisors, but in most cases, if your advisor is not a big name person in your field or in your industry, don't list your advisors. Or if they're not a big investor name, or if they're not a big like successful founder that's had traction or success in your field, putting advisors doesn't add a lot of value to your deck. Unless it's going out to their network, then you can include it. If they're shopping the deal for you, helping you try to bring people in and they want their name on it, that's fine. But as far as a generic deck going to new VCs, I probably wouldn't have it. Okay, USA personal concierge service. So these are just a bunch of different markets. I don't really know what your market is. You're not being specific enough. You're just saying, oh, there's all these markets, but like, well, what's your market? What's your potential? Could do a bottoms up calculation. So you're saying here, there's 3.1 million people in London that I guess would throw parties, or throw events, or 21 million total. I don't know if it's the totals here, but just give me an idea of like how big this opportunity is and make it, spell it out. All right, in 5 years, you want to have 5 million visitors, 1.5. These are just like made up numbers. And again, I haven't been convinced of why the product needs to exist yet. Competitor analysis. So people use messaging apps, social media, party planners. Okay. I guess I really need to be convinced of what the product actually does in its entirety and how it works, just to see if I feel that the team is capable of executing an experience that will have large adoption. But it sounds like you put 100K into it yourself. So the original company was this name. Okay, now we're drawing back to the email address. Built a marketplace for kids' birthday parties, got 100K, and now pivoted to improve and expand model. Okay. Roadmap. So expanded Toronto. You're trying to raise 750K. And then raise another round and expand to more like, so basically a regional marketplace for planning parties. You don't really do a good job of explaining the marketplace aspect, and that I imagine you're doing local rollouts or regional rollouts because you need penetration on both fronts of customers and suppliers and vendors. That's a very low valuation, so it's reasonable for your stage. Be curious as to who's building it, if the CTO is hands-on code, or if you're paying a dev shop. If you're paying a dev shop, probably wouldn't find much interest in that. Yeah, I guess I'd give this a 1 or a 2, and the main reason is it's a lot of has to do with it being just too early. But there's a better way to articulate your offering. And there's a ton of these like party planning. Again, I'm disgruntled because I've seen a ton of party apps and like companies that try to revolutionize how people do this, but it's a really hard problem to solve. It sounds easy, but so many companies have kind of failed and tried. The ones that have won have been mostly in like the wedding focused area, or like have a very specific, value add to one part of the problem. This seems like it's trying to do it all. And anytime an app tries to do it all right from the get-go, it usually doesn't last. And I'm worried about the company's ability to execute when they demonstrate their product like this. This is not something that is intuitive for me to be like, oh, that makes perfect sense. That looks like I would want to use this all the time. It's so easy. This does not demonstrate that. So if I would be founders, I would go back to the drawing board and create some kind of GIF or video demo that just slaps me in the face with how stupid simple it is and how valuable the results are and what the outcome is to convince me that this has something to offer. So this one's I don't want to be too bad. Design's not terrible. I would just give it a 2. It just doesn't do a good job of convincing me that this would be worth my time to have a further follow-up meeting. All right. Tycon hit the mark. We help Shopify stores increase their sales through shoppable images. All right, cool. Techstar. So it's fun to say this. Like, if you have any kind of credibility or credible investors, it's always good to just kind of throw that. Oh, okay, they at least graduated Techstars. What's special about them? Let me dive in a little bit more. It's not always something that everyone can do, but if you have like some kind of credible investors, you either put that in the introduction email, or you graduate from some accelerator or something like that, as long as it's a notable one. If it's like a no-name local one and you're shopping it to investors outside that region, it probably won't help you. But everyone knows Techstars and YC and those types of things. All right. So basically help Shopify increase. All right. So this is a good representation. Like we were talking about the previous one in terms of like not demonstrating what the product does. This shows me something very different. It's basically looking like it uses AI to identify where to drop in a product placement. That's what I'm imagining it's doing. So I'm like, oh, I want to know how that's done. All right. So we talk about the problem, lose half your budget, gain nothing. Daily ad spend, waste. All right, so that's key here. 622 is wasted daily. Interesting. So ad target sees plummeting. Consumers actively avoid ads. Loss per new customer, $29. Brands now pay 3x. Yeah, totally true. Especially direct-to-consumer brands are getting screwed on CAC right now. It's incredibly difficult. Talking about puts brands and content and not around it. So it's like, okay, cool. I get this visual. It's kind of cool. So I'm supposedly going to be able to tap to activate. The question will be, how am I engaging with that? Where is this medium live? So I'm liking the concept, but I just don't know where it lives. And so that's my big concern, because obviously, Facebook or Meta and TikTok would do this themselves. So where's your proprietary attack and defensibility? These points, sure. New revenue stream, partnering with recognized brands, seamless shopping experience, sure. Ad spend. All right, so this is your bottoms up. So $13 million e-commerce, 13 million e-commerce stores. If they were to pay you $2,000 a year, you would have this much, market. Sure. Your phone now focus on Shopify stores only. 2 billion, and then selling physical products up to 1 million in sales. So I'm curious about why you would want to focus on the smallest people with the least amount of money. So you're basically going after brands that have less than $1 million in sales. That just sounds like a giant red flag to me. So I'd be careful. As you want to not kind of shoot for the bottom barrel, most difficult and least profitable clients, as most investors will see it. So you got to be careful there. But it's good. Everyone should do a bottoms up. It's always a good idea, but I'd be concerned about choosing the wrong clients here. I'd rather have 5,000 clients pay me 10, 15 grand than have 62,000 clients pay me $2,000. That's just common sense with investors, and that's something that you'll get pushback on most likely. Accelerating success through traction. So you got 10K in revenue through, you have 4 partnerships, and you have a bunch of merchants on a wait list. Be curious so what that actually means, and if they've opted into that wait list, or you just have them on a hit list. But it sounds like you have a couple MVP clients, which is great. So people subscribe. So they're charging the brands, and then they pay 30% booking campaign fee. So I guess a brand, like one of these small merchants, would book an influencer, I guess, or to place on shoppable images. So I'm curious about how that scales and what that experience looks like. I'm a little confused. And then takes 10% commission on all shoppable images. It seems high. So basically, you're saying I'm going to pay. If I'm paying $1,000 to do an ad campaign, you're going to take 300 of it, and then if I make $5,000 on it, you're going to take another $500 in commission. So be careful double dipping on that side. Like, yeah, sure, maybe sounds like a good business model, but also you might be eating away at their ability to be profitable as a brand. So keep that in mind. Okay, so competitors. I would be concerned about how you're actually going to be clickable on social media without it being interfered by the big guys. All right, team. Maybe give a little bit more meat on the team as to like what makes you guys special, and what makes your mentors special. Maybe a little bit more blurbs. Having a bunch of logos, sure, but JustWorks is probably the biggest logo on here, and AWS and Fearless Fund are probably the biggest names. But then you have a bunch of other names that don't mean a lot to me. So I would be careful on how you position that. Team slides, in my opinion, should always have a link to LinkedIn, and should always have like a brief, like super brief, like 1 sentence or 2 sentences on each co-founder and value add team member that's mission critical to the success of the company. And I'm usually against advisors or mentors unless they are big names in your industry or investors. Okay, so basically raising 800K to get to 300K. Yeah, 300K could potentially get you like a seed round. Just keep in mind that seed rounds the bar has moved for seed rounds. It used to be like 100K to 500K. Now it's getting closer to like 500K to 1.5 million. to secure a seed round because the bar has moved so far for Series A's as well. So just something to think about when you're doing your capital strategy, your capital planning. How much capital do you really need to get to a benchmark where investors will be excited in the next round? And something that I encourage people a lot in the use of fund slides is tell me what you're actually going to accomplish, which, get to 300K ARR is good enough, but like what type of customers are you going to get? What's going to happen? Growth drivers over 5 years, sure. Anything kind of pre-seed, I kind of it's not really worth having these slides. They don't really mean anything. They just kind of take up space. This is a good example of how the product works. I just really want to see it actually, how the app would work, and how I would be able to do that and the technology behind it. Because at least from my understanding, this is not an easy technology. And there's been very little mention of how you're actually going to do that. And are you raising the money to basically figure that out? Or do you already have it figured out and now you need to, deploy it or whatever? So that's my big risk. And I like ad tech type stuff. So I would probably maybe engage and be like, well, how do you guys actually do this? What's your IP? What's your technology to do this, to enable this and follow the transactions and so on? Also, big discrepancy in just how you tell your story. Like, this is important for all founders to take in mind. Like, these guys are like, oh, put Coca-Cola in here. But our target audience is the exact opposite, wherever it was, like sub 1 million in sales. So I would really try to position your business model to target more profitable clients, not what you might think are easy to get clients or what you have access to. Really think about the real client profile that has real ad budgets that would really actually use this. The companies that are figuring things out are not going to be, experimenting with new channels. They don't have those kind of budgets. Bigger agencies, bigger brands have experimental budgets to kind of find edge in their, marketing. But tiny little brands are going to stick to what they know. They just can't, gamble on that kind of stuff. All right. So this one, I give it a 3. I think there's some potential here. I think the story just needs to be re-articulated a little bit and a little bit more emphasis on the technology. Okay. All right. We're going to move on to coach tools. Let's see here. So I'm just making sure everyone's still following along. Like I said, if you have any questions or anything like that, feel free to chime in. All right, so this is on Canva. So again, we've seen now multiple different platforms. Oh, sorry. Yeah, no, hit this one. So we had Founder Suite, Journey, Google Drive, Canva. So we're starting to see a lot more diversity in how founders share their decks. All right, coach tools, player evaluation simplified, precision in player evaluation, drive winning results through accelerated evaluation analytics. All right, cool. The video does work. Good job. Be surprised how many founders mess that one up. Players deserve improved feedback, limited resources, communication gaps, feedback effectiveness. All right, I think this is really clean so far. I'm flowing along, getting the point, easy to follow. And I would agree that coaches do struggle to give effective feedback if they're not like real experts. It's very difficult to know exactly what might be holding someone back. So I can agree with that. The trusted evaluation software designed to optimize player evaluation for coaches. This doesn't excite me. I was kind of hoping maybe there's something a little bit more visual, like this data. I don't know how it becomes actionable. All right, cool, but they got traction. So clearly some universities and schools are using it. Close to 5,000 users. So it's like happening. I would like to know what these total user. Okay, so that's something for all founders to know. This is like a teachable moment. Be careful with using total users. At the end of the day, VCs don't care about how many people came once and never came back. They only care about MAUs. So if you tell me you have 5,000 users, but then I ask you what's your MAU, what's your MAU, and you're like 100, then I'm like, well, clearly you didn't figure anything out. Because if you got 5,000 people to check it out and only 100 are staying, it's a bad story. You're better off saying we have 100 MAU and we're figuring everything else out. So it's an easy way for a VC to just kill a deal. Is just to ask you one question about are those what define those users. And when people put total users, it's a vanity metric, especially for any kind of app or software. So you really need to kind of focus on the numbers that matter, which is basically month over month growth of your MAUs, DAUs, for any kind of utilization based app. That's what you actually need to focus on, and that's the numbers you need to drive up every single month in order to attract investors. Right. Game-changing opportunities. That's right. Have a million athletes. Okay. Sports tech market. Cool. It's going to 4x, and that's a crazy CAGR. Definitely would want to see that research. But either way, it's still a decent sized market. I just want to know what quantifies a sports tech that I don't know, and what percentage are you relevant to? So again, call out for all founders. What percentage of the market actually applies to you, and what is that opportunity specific to you? It's like, all right, cool. 12 billion is spent on sports tech, but where are you in that sports tech stack? Like for coaching optimization tools, it's 50 million. Well, then we're not having an interesting conversation now. And how are coaches paying, or the student, athletes paying? How does it work? Cool. So you have some engagement on social. So this is not terrible. Guess some kind of signal, but it doesn't show me that something's figured out. It's just kind of like, okay, you got some mentions here and there. Okay. So sure. Only raising 250K, and that will get you to 150 programs, 10,000 athletes, and 160K in annual revenue. So a couple things wrong with this. So the deck's actually, it's good at getting to the point, but then it, missing the opportunity quite a bit, missing the business model. Like, how much are you actually charging? What's, it's one thing to say you have users, but again, what type of users? Are they active? Are they paying? Are they not paying? That's a huge thing to include. And since you're building some kind of software, also the tool itself, like if I'm coaching, I'm probably coaching in the field, so I probably need more of an interactive app that is friendly for my phone. This seems to be on a tablet. I'm not sure how many, I don't know, maybe it's commonplace now for coaches to have tablets, but this looks more like a web app, not really a mobile app to provide constructive feedback. There's nothing actually saying how you're doing it. So, like, I'm curious, like how and what data is being populated. So I guess you really rely heavily on me to watch this video, which in my opinion is not a great idea. You should be able to articulate how the data works. And this platform just kind of, like, at least I don't get it, and it'd be good to kind of have a little bit more proof of that what you're doing is working. I think that's the biggest missing issue you have with this deck. I'd give it like a 2 or a 3, and I'd probably just stick with a 3 because I think there's some potential here. You kind of get me excited about something, and then you fail to deliver, and that's basically on the stats and the numbers, and also clearly identifying the business model. Another lesson for all founders, like, the capital you're raising now should get you to the point where you can raise capital again. So I know this is always a challenge for a lot of founders, like to raise more, raise less, whatever it might be, but you need to make it very clear is like, how much capital do you really need to get to the point where in 12, 18 months, you'll be in a healthy position to attract capital again. So really the stages are, if you're raising like $250,000 now, or $500,000 like pre-seed, that needs to get you to like $500,000 in revenue. If you're like a B2B or B2C software or solution or something like that, you need to be like at least $500,000 in revenue and have some kind of velocity up with that. So it has to be growing month over month to attract new investors. If you aren't hitting those metrics, you're not going to succeed. And you need to be able to articulate that in this round now, that you have that path, and the capital you're going to raise will get you there, and you're going to communicate that. So 160K, I think, is too low. Like, I would say raise $500,000. And if that gets you to, 400K, 500K, that's what I would put. So you need to model that out. All right. So I gave it a 3. I think it had potential, but it just kind of missed the mark on some of the key details. So I wouldn't take a meeting on that one. So it's probably more like a 2, but there could be some potential follow-up there. So if it's a VC or founder or an angel that is passionate about solving that problem, an athlete, something along those lines, it has a chance. But for a generic VC, they probably wouldn't care. All right. Spacely, media, market intelligence. For marketers, good. Clearly identifying who the problem is for. That's always helpful to get off the bat real quick. And then marketers is a pretty broad, term to understand, so it's not too bad. All right, planning and buying static media is antiquated. Okay. This is content, cost disparity. Yeah, sure. It's not a bad deck. I probably wouldn't have read it much. I probably would just probably read this and got the point. That's like, okay, it's antiquated, and just moved on. So I think this probably could do a better job of quantifying the problem a little bit more. OH media is incredibly inefficient. And just for reference, if you're this kind of out of home reference here, you bring it down here, but I don't know, if you're not in ad tech or media, this might not be something a kind of technical jargon that might lose someone because they don't know what that is. So just be careful when and how you use technical jargon, and make sure that you're using technical jargon with a technical audience that knows it. Okay. All right. According to Salesforce, or sales reps online. Okay, so this is interesting. So now we're talking about sales reps' time versus the problem. So, okay, all right, now we're losing me. So at first I was very clear, but now we're talking about publishers and out-of-home media companies and publishers of all sizes. Now we're talking about salespeople. So this is a bit of excessive buildup. Two-sided marketplace for print media to automate print buying processes. Okay, so marketplace. Okay. So show off your inventory. So let's see the demo of the product. So I can kind of, looks like it has some kind of regional purpose. I would probably speed this up a little bit, but this is a good example of like a demo of like how does the product actually work. But I would probably want to be like, all right, how do I book something? So everyone focuses on the dashboards, but you really also need to focus on what they actually do. So I'm kind of waiting to see what they actually do. No one cares about a secure private login, just because that should be expected for any application. All right, so I want to sponsor the Chase Center. Available panels, cool. I can see exactly how much it costs. That's kind of cool. And then it's 20 grand, so just book it. So good, thinking larger scale activation. So going out and getting certain venues, or like you said, out of home media partners. Okay, so it's like, all right, it's interesting. I'd want to know who's already doing it and what's the revenue potential. Print. Okay, so I imagine it's the same platform, so I'm just choosing between different mediums. I don't know if I need the exact same, kind of pitch. I don't know if I need 2 slides for it. Also, don't know why we brought up the sales stuff yet from previously. I'm waiting for that to come to conclusion here. I guess it was maybe just your salespeople are inefficient. You don't need salespeople if you use their platform. This is a lot to read. I don't want to read all these bullets. That's a problem that a lot of founders do. This is too much to consume. Whether I'm trying to watch this and read this, it's not a good combination. I would probably just have like 2 or 3 bullets and underneath the main video just to kind of highlight the things I should really keep in mind. Okay, 5% transaction fee. Seems like a low transaction fee for a market that has infinite margins. In a lot of cases, I would probably charge a bigger fee just to make sure you have a lot more stability and sustainability to operate. So 4 billion is spent on non-digital. So your TAM in this case, and I would want to be specific clear. Also, try to leave like reference links to where things are going. Also, this is a lot of different TAMs. This is me to be a sales tool. Okay, thanks for clarifying, David. So on this one in particular, this is just too many TAMs. Just give me the one that matters, or aggregate it all for me, showing me all the individual ones. It just doesn't resonate with me. And also give it to me from the perspective of like, what's your take home? Like, all right, sure, 18 billion is spent on ads in these in whatever magazine ads, but you're only taking 5%. So technically your revenue potential is 5% of that. So it's a very different number. So that's something that I would keep in mind and try to present as like, what's your actual revenue opportunity? One other note, again, I always tell people, make sure to have a link to your LinkedIn, make sure I can click on these and actually open them and go to your LinkedIn. Are all these founders or not? Having a chief of staff for pre-revenue company is not always a great highlight, so I'd be careful with that. And I'd probably put some logos as well, just to kind of make this a little bit more legible. Also a bit of just a design issue, having the highlight here, but not the others, and like text, font changes and stuff like that, just not tailored. So, okay, this is a good reference of how to use advisors. So board of advisors, they're putting like former editor-in-chief of InStyle, chief diversity officer at L'Oreal. Not sure how chief diversity officer comes into play here. But if it was L'Oreal's like media buying side, that would be huge. Or she has those connections maybe. Vice president of global media for Tiffany & Co. That's helpful. Like, brand on the brand side. So like that's a good way to use relevant advisors because they're coming from big brands. That's one way to do it. Brand partners, okay. Publisher, sure. Raising 18 months of funding to take us through operational launch skill. So you'll get to 3.6 or 9.6 million revenue in 12 months. It seems like a lot. These campaigns don't really scale that fast in a lot of cases. It takes time to deploy. And I'm curious if that means GMV, like the gross merchandise value. So you sell like $1 million market sponsor package, but you only get 5%. That's a very different equation. So technically you're saying you'll be at 500K in revenue, if that's how I would interpret it. So that's something that GMV is 200 million in ad sales from what David, the founder, is commenting here. Good luck. That's a lot. I don't want to say it's impossible, but being that the platform doesn't appear to be launched yet, potentially, or maybe it is. If it is launched, I would highlight more traction. Yeah, I would say what deals have been done. Maybe you have tech working, but if you don't have anyone using it yet, and you think you're going to get to sell $200 million of it that quickly, either you have some back pocket relationships you have not disclosed here that would lead to that, or deals that you already have signed, but I would be in disbelief and would discredit and discount this deck. So just kind of keep that in mind. It's just not something that's often realistic. But some founder VCs don't care. They like the market itself, and they'll sit down and have a conversation with you and try to figure out what actually is possible. I did not see a traction slide. So you said if there is one, I'm not seeing it. So after board of advisors. So this is just brands that you're talking to. I don't know what partner means. Do you have signed contracts with them? Have you gone past procurement? Have you gotten actual dollars signed? Then you need to call that out. Current partners, like, yeah, you need to say that you actually have these deals done and what the actual value is. I think you failed to do that here, and that would hurt you dramatically because this doesn't look like anything of substance. So be a little bit more clear as to the numbers you have on the traction. And or who you actually have signed and what that actually means. To what degree did you sign an MSA? Okay. Moving on. Oh, so this one, I feel like there's potential. Again, I like ad tech type related opportunities. I think it's coming back, being a little bit more popular with investment, whereas before it wasn't. So I think this one has potential. I give it like a 3 or a 4. I think it still needs some work, and it sounds like they're maybe doing better than what the deck is representing. So that's something that they need to articulate better. We're going to have time for one more. Investor deck, Beautopia Live. So we're building the flagship event platform for the beauty industry. Okay. So an event platform. A revolutionary beauty industry, multi-day live event, marriage. So I don't know if this is a venture opportunity. Maybe it is, or a tech play, or it's just a marketing, an event play. Key stakeholders in our model. Let's see, brands, key stakeholders in our model, brands, retailers. So this is. Sounds like just an event to get people together. I don't know if this is something that it could be a totally fine business. I just don't know if this is something that would resonate with VCs. So the deck's well put together. Doesn't seem like an opportunity that most investors would particularly care for. Yeah. I imagine it's something that becomes a bigger thing than just one event. And a lot of the highlights that are being called out here are just the benefits of other events. But yeah, it looks like you want to go, worldwide and become the next big beauty event. I guess I'm not clear on why the world needs it. But there are countless events. People come to events all the time. Again, it could be a very good business. I've been pitched similar type opportunities before. I personally just don't see that. Again, I'm putting this all from a VC perspective. There are other investors that might be interested, family offices that have, interest in the beauty industry, or, angels that have expertise in it. But this doesn't seem to fit a traditional venture model. But event businesses can be great and big businesses. No doubt about it. It just comes down to, can you execute and get the eyeballs and the foot traffic? So yeah, basically saying 4 million on the first event, losing a little bit of money, and then becoming very, very profitable over time. Sure, maybe, yeah. So taking about 1.5 million to get the first, event off the ground, getting it going. Like, I think this is actually a really good deck. It's just not something I have any interest in, and it doesn't look like it's off the ground yet. And there's already so much competition in the space. Like, how do you sift through the noise and get people to actually participate and commit to a brand new event that doesn't have an association affiliated with it? So for me, I would be out instantly on this, but there could be a group out there, and I think the deck is very professionally done. There's clearly some well thought out, strategy and plans and everything like that. I get it. I get what's being sold. It's just not something that I think attracts to most VCs. This would be more private, high net worth individuals, or family offices, or any particular brand that you potentially could sell this stuff to directly to fund it, which is what most investors ask people to do. I ran through that one really quickly. I give it like a 4 from like just a well put together deck perspective, but not relevant for 99.9% of venture capital firms, which is, again, predominantly the focus of what I do this show for, is more venture. All right. Nebulark, supply chain, intelligence, monitor, act, secure. Okay, over 22 million goods are transported worldwide every year. All right, this is a good. Okay, so we talked about quantification of a problem. This is a good quantification of the problem. 22 million worth of goods are transported. 4 trillion are specialized goods, and more than 100 billion incur losses. It's like perfect, great delineation of explaining and quantifying a problem for global supply chain, and how you're having a real-time solution to, I guess, solve for this problem. Get real-time insights, trigger actions through alerts, preemptive actions. So it looks like there's some kind of hardware tracking device that gives you, in real-time updates. So a bit of a hardware software play. Okay, pretty straightforward. I'd just be curious what the competitive landscape looks like and what's the unique competitive advantage. I guess this is other competitors. Benefit, saves money. I would just be curious about the moat or real competitive advantage. I would use their logos too, just so I know their actual competition, because at first I thought they're maybe like sub products of yours. Business economics, you sell the device, you get an implementation fee and then an annual subscription. Good. Sounds like it checks all the normal software hardware boxes. Okay, so you have an order signed for $500,000 and you signed all these other contracts. Great. You're doing some pilots. Cool. So you're making some headway. You're expanding markets. All right. So like things are going forward. Be a little concerned when I see 2019 to 2021 broken out and then just 2 years kind of scattered across this period. I guess maybe from a design standpoint it's tough, but I would probably quantify the performance a little bit better. Oh, but here you go. You got revenue. Cool. So confused by the commas here. I don't know if that's a international, if these are in dollars then, or if they're not in dollar. Yeah, it says dollars. Just a little confused by how the commas are placed. I don't know if you're doing 193,000 or 282,000 in revenue. But here it looks like you're doing $51,000 in profit from last year off of $280,000 in revenue. And then you're doing, so it just confuses me. Like, this is details. Details matter, especially in numbers. So get that cleared up. Put the commas in the right place. Otherwise, it just looks bad. So definitely would want to fix that. If this is in 2 million, then I'm like, all right, you're really onto something. If this is less than 2 million, this is 208,000. It's like, not seeing a lot of growth. These numbers are not exciting for a VC to be excited about. Like, there would have to be some clear explanation as to what's holding back the company from having growth. And just saying that, like, oh, for 4 years, we've been pretty much stagnant, a little bit of growth. And then magically, this is the year that we have 10x growth. A lot of VCs don't like that and don't believe in it. So you need to be conscious of that. Also, saying it's 3 cents, and like, I don't know what these values mean, or if they're meant to be in thousands of dollars or what. So clearly, whoever put the numbers together doesn't know how to really tell the story of these things. It's like, all right, but you got some cool contracts. These all sound great. Just, tell me the actual real value and how you actually make money. Like, how much you're charging for the device, how much you're charging for implementation. Like, show me the actual unit economics. So that's something that all founders should be conscious of, is like, show me the real unit economics of your business to show what the real opportunities are. Enterprises or businesses empower. Okay, sure. I feel like I already got this gist from the rest of the deck. I feel like this is a useless slide. Why invest now? Well, yeah, of course you need money. Get rid of this. Everyone knows you need money. Like, just delete that. It's a waste of space. High potential for growth. Don't tell me, show me. Like, what are you actually going to accomplish? Show me what you're actually going to achieve with them. How many contracts you're going to get, how many deals you're going to close, how much revenue you're going to get to. That's what you should be showing me. Like, what actions will you be actually doing to raise a pre-series A? So pre-series A If this is your revenue, if that's 282,000, you're pre-seed seed. If that's 2.8 million, then we're talking, Series A. So just, again, you totally screw yourself by not displaying your numbers accurately. At least, again, I'm assuming this is for U.S. venture capital firms. Exit strategy, not really a big fan. Also, just multiple buyers possible. Okay, waste of space. Yeah, sure. Anyone can say that for any company. There's nothing special there. This is just words. And just big companies, like, delete this slide. It adds zero value. Worry about M&A. M&A only becomes relevant when you're at millions of revenue. Like, I would say probably 5 to 10 million in revenue with strong growth trajectory, you can have an exit strategy slide. If you don't have that kind of revenue, don't waste your time with an exit strategy. Everyone knows that you're going to be figuring out your shit. You don't need to be worried about an exit strategy when you don't even have an idea. Have revenue. Okay, team, again, always link to LinkedIn's. That's always my big call out. So I got the co-founders and advisors. Again, I like the idea of having logos as opposed to like just listing them here, just because they stand out a little bit better and it's easy to recognize. Okay, the way. All right, so that might be why it's maybe how it's done in India with those numbers. But again, if you sent this to a U.S.-based investor, you should accommodate a U.S.-based investor. So in this one, I think there's potential here. I think the product and market is interesting, and the solution's interesting. I think there's a lot more competition than they're articulating. I think they don't share good unit economics. It looks like they have some traction, but it's not well articulated in terms of what it actually means. So you need to tailor your decks to your audience, and that's how you're going to get the best performance. So just make sure to always keep that in mind and articulate the numbers accurately and how you actually make money and how you transact, and get rid of useless slides. Don't have exit slides or mission slides if they're redundant throughout the deck in terms of the material. Just for the sake of having that deck. And then make sure to tell us what you're going to use the money for to accomplish things. What are those accomplishments going to be? How much runway that gets you, and how much, how big the team is, and who you're hiring, and what are the outcomes of your investment. All right, guys, we're a couple minutes over. I appreciate everyone joining us for today. As a reminder, Deco is our sponsor. For those that, that last deck, I'd probably give it 2. If you're not a 4 or 5, you probably need to be talking to Deco. Highly encourage you guys, check them out. Again, you can reach Robert at getdeco.com or go to getdeco.com/thunder. And if you're not already subscribed to Thunder's newsletter, you can go to join.thunder.vc. We do a weekly fundraising demystified newsletter where we talk about tips and tricks and articles on how to articulate your capital strategy, how to acquire capital, and how to grow a startup to get funded. In addition to our weekly podcast, where we bring on founders that have recently closed capital to share their insights and stories of how they navigated the fundraising landscape. So again, thanks everyone for showing up. We had a pretty solid turnout. I hope to see you guys next month. We do this every month on Friday at 1 p.m., usually mid-month. And if you guys want to have your decks reviewed, all you do is just submit at the Luma. So it's lu.ma/Jason Kirby. You'll see the monthly pitch deck, and you can go ahead and RSVP and upload your deck for us to review. We had some good ones to go through today, so I appreciate you guys, putting your souls out there and sharing your decks. Hopefully, you all found this useful. So be sure to tell your friends and have them join us next month. I'm going to go ahead and sign off, everyone. Hope you guys have a great day.